Mickey Mouse has applied for an Amigo loan. I'm not picking on Amigo, by the way, they're just a prominent guarantor loan company. Now, you all know that Mickey should be reading the pre-contract information. Here is the pre-contract information. But Mickey's probably a bit intimidated by it, so I'm going to help him go through that and just make sure that he understands what he's signing up for. Section 1, contact details, that's not very important, just it's some gobbledygook for Amigo. Here is the important thing, the key features of the credit product. Type of credit, you don't have to worry about that. The total amount of credit, that's basically what you're borrowing, and it's this £4,000 right here. Now, the question for you is £4,000 A, what you signed up for? If it's not, go back and change it. And B, is it the minimum amount you really need? Guarantor loans are expensive, so if you need £3,643, sign up for £6,443. Don't round it up to £4,000. It'll end up costing you a lot of money down the line. How and when will the credit be provided? Again, that's just when will they pay you, or in this case, your guarantor, the money. The duration of the credit agreement. What does that mean? That's sometimes called the loan term, and that is the number of months over which you are going to be making repayments. So here it's 36 months or 3 years. So you're signing up, or Mickey's signing up, for 36 months worth of repayments. It's important to think about that because it's a fixed amount of money. So Mickey needs to be confident that he can make the repayment amount every month on the dot for the next 3 years. Therefore, there needs to be quite a lot of buffer and quite a lot of flexibility in what he signs up for. Here, the repayments. What Mickey's signing up for is £195.16 a month. So again, he should be asking himself, can he really afford this? Can he afford this now? But more importantly, how confident is he that he can afford it for the next 3 years? What are the bumps in the road that he might hit that might make this difficult, and how can he plan for that? This is really important because in a guarantor loan and any loan, but particularly in a guarantor loan, because like any normal loan, if Mickey misses the payments, it's going to impact his credit file. He could end up in default, maybe end up in court even. But the added wrinkle on the guarantor loan is that if Mickey can't pay, his guarantor is going to end up doing it, and that could well put a massive strain or even kind of ruin the relationship between him and his guarantor. So that puts a kind of extra burden in my mind on getting it right. Total amount you'll have to repay. This is basically just saying what is the amount you borrowed, £4,000, and how much interest are you paying. Add those together, and that is the total amount you will end up repaying. It's also 36 multiplied by this £195 here. So that gives you £7,025, of which £4,000 is what you originally borrowed, and £3,025.76 is the interest. So what you borrowed plus the interest. So that's £3,000 here. That's a lot of money. So you're borrowing £4,000, you're giving them £3,000 interest, and you're paying back over £7,000. That's why you need to be really mindful of how much you're borrowing. So if you could get away with less, please do get away with less. Security required. So if this is an unsecured loan, a normal personal loan, this section wouldn't be here, but this is the bit which basically says that it's the guarantor, what they call the guarantee and indemnity, which is going to ultimately pay this credit agreement if you can't. So this is the bit which says the guarantor is on the hook if you aren't, and that the guarantor will have to pay. He or she indemnifies the company is the term. Moving down, the rate of interest, that seems fairly obvious. The one thing to draw your attention to down here is that this rate of interest can change. So Amigo have the right to increase it pretty much at their discretion, and the implication for you is that your payment could go up, or your payment could go up, or your term could go out, basically ending up costing you more. And in the first case, potentially putting you into difficulties. Again, another reason to make sure that you've got a good buffer between the payment you sign up for and the payment you can actually afford. You don't need to be running that right up against the wire. Down here, cost in the case of late payments. Basically, this means they will not charge extra interest on the late payments. They're just going to carry on charging the 49% APR on those. But of course, they will report you to credit files, credit bureau. The final thing just to call out here is early repayment. Early repayment is when you come into some money and your auntie dies, for example, leaves you £2,000, you choose to pay off your guarantor loan. That's a great thing to do with the £2,000 loan, but the only wrinkle is you probably need to tell them that you intend the loan as an early settlement is the term. So you have to say, I would like to settle or partially settle my loan early. If you don't do that, they might just end up taking the money and using it towards your future payments, which will actually end up costing you more in the long term than if you just settle the loan. Great, that's really what I wanted to say about the pre-contract agreement. Mickey is now really well equipped to go ahead with his guarantor loan. Mickey knows that he's borrowing this amount of money, that he is going to be able to make this payment, £195, comfortably for the next 36 months, and that will end up costing him a total of £7,025 to repay back. That's what those payments add up to, £4,000 of which is what he borrowed and £3,000 of which is interest to Amigo. And if he's happy with that, and if that's a good deal, Mickey is more than entitled to sign up for it. Thank you. Until next time.